Good afternoon, everyone. I'm Christian, co-founder of Billy. And Billy is a very, very young company. We only founded the company in December 2016. However, we are not first-time founders, so we are in the game for a little bit longer. So our first company was called ZenCap, and it was a crowd lending platform, a marketplace for business loans that we eventually sold to Funding Circle in 2015, and that since then trades as Funding Circle Continental Europe. And after we have sold the business to Funding Circle and integrated it for a little bit more than a year, we decided it's time to take on the new adventure and to build Billy. So what is Billy? Actually, Billy is not a payments company. Although we are in the payments part, Billy is a working capital provider focusing on short-term capital provision in the range of factoring and invoice discounting. But maybe we were put into payments because we are already as automated and as quick as you usually know from payments companies and not basically from lending companies. And that's basically the story behind Billy. So the problem we are addressing is also one that is well known. When we look at Germany, Germany is a pretty overbanked market. So in general, access to funds also for smaller companies is pretty decent. What we do see, however, is that the classic products that are offered to small companies are products that are not the right ones. So most of them have an overdraft that they use for financing their short-term liquidity needs, but they don't have access, as all the bigger companies, to specialty funds as factoring, as invoice discounting. And that is basically because the underwriting model and the operating model of the current providers don't allow for an automated approach and thus don't go there. That also explains why our market is a new market and a big market. And if you now ask about market size, this is of course always the most interesting question. What we did, because currently there is no market for smaller companies in factoring in Germany, and that's where we are based and where we are focusing. What we did, we took an estimate and we looked at the big companies. Currently there are around 30,000 big companies in Germany that are heavy users of factoring, out of 3.5 million SMEs. And when you take the ratio of the loan volume that they have outstanding to the factoring volume and simply apply that to the loan volume that is there for the SMEs, you already arrive at a market size just for factoring in Germany that stands at 36 billion. And if you now multiply that by around a factor of 7 and 10, then you get at the opportunity that you have from factoring in continental Europe. So it's a pretty big opportunity that is out there, and that is at the moment pretty much uncharted. So far, I haven't told you that much new. I mean, the problem is well described. There is difficulties in accessing specialty finance, even in Germany, and the market that is behind it is just huge. That's the story we always tell. But what makes us separate? What sets us apart from all the others that are currently trying to build a factoring product in Germany and across Europe? In my view, there are three things that stand out and that lead the way to a new breed of fintech companies that defines, in my view, what we call fintech 2.0. So these 3 points, in our view, are, first of all, now the new players who are upcoming, and we are one of them, they are fully regulated players. They don't use bank partners anymore who eat into their margins and slow them down because you need to integrate in their sometimes old-fashioned APIs, but you go through the full thing yourself and get your own license. Secondly, the product that we built and that the best peers around us built is set from day one on a huge partnership network that is drawing on industry leaders. And number 3 is that you really go the last mile on truly automating not only your risk procedures, but also your full KYC process, anything that banks and also many fintechs usually struggle with. So let me go into the details of that. So when we talk about licensing, usually, especially in Germany, it's a quite long and difficult process. For us, in the way we set it up, it took just 3 months from initial application to getting a full license from German regulator BaFin. And that without any support from external advisors, just with a team of 4 people knowing what they are doing from a regulatory perspective. So that is a big difference, because you don't need any regulatory gray hair anymore to get your licenses. You don't need a culture clash that you bring into your companies early on when you want to be a regulated financial company, but you can build it yourself. Secondly, the partnership network that we were able to create assembles some of the best and big names in German factoring and SME financing that we are seeing. So I just want to draw on a couple of them. So first of all, one of our biggest and earliest partners is Targo Commercial Finance. And for those of you who don't know the company, Targo Commercial Finance is the largest factoring player in Germany. They currently do around 50 billion in factoring volume in Germany alone and possess with it 25% of the market. They are not only our first refinancing partner, but they also have decided, and that is what is new about that, to enter an advisory relationship very early on. So their CEO, Joachim Secker, who also heads the German Factoring Association, sits on our board and makes sure that there is knowledge transmission from everything the old guys learned over the last 30 years and apply it in a new circumstance to Billy and their digital approach. Secondly, there is a big bank like Postbank that shares their large 300K customer audience with us, because they say, we are number 2 in factoring in Germany. But when we look at the way we need to address small companies in the way we can give them factoring lines, we are not able to do that with our own factoring arms. So we need a small and agile and quick partner who has the technology power to do it. And that's why they decided very early on to cooperate with us and open their large customer base for us. But the most important point, what really sets us apart from everyone else who's currently out there, is the way in which we automated underwriting and KYC. So usually, and that was the case when I was working and building ZenCap and then later on Funding Circle, it takes around 1 day to 3 days to fully approve companies and to give a business loan to them. At Funding Circle, we really cut that whole process from application to fully risk scoring a company to KYCing a company to just 7 minutes. And of course, this is only possible, again, if you have a strong risk engine that is drawing all the data that you need for risk scoring in an automated fashion, and then have a calibrated model that you build that is scoring the risk that is really on a big database. And I think that is the biggest differentiator, because everyone at the moment, it's a little bit of a buzzword, is running around and saying, hey, we do big data, hey, we do artificial intelligence. But the question is, when you're a startup of like 500 or 1,000 customers in the beginning, how would you do it? You simply don't have the data to do it. So what we did, we tapped into a large tax advisor network in Germany called ETL, and they have around 1,000 tax advisors and around 100,000 customers. And we have a scoring technology partnership with them that opened their database of bank account data over the last 10 years of their 100,000 customers, and they allowed us to put our big data experts and artificial intelligence experts on it to really build an algorithm that is based on true big data. So we calibrated our classification mechanism and the scoring mechanism on a database that is around 110 million bank transaction data from over the last 10 years. And of course, from all those companies that are in that database, we also know the default data. So from day one, we are pretty much able to risk score companies in the ways banks do. So for those of you who are a little bit deeper into the details of bank scoring, currently the discriminatory power of our model is a so-called Gini of around 70%, and that is comparable to the best banks that you see in Europe when they score SMEs. And I think if you take those 3 things together, you see that a new breed of fintech there really is emerging that combines best regulatory expertise together with a lot of scoring expertise and enables small companies to really access financing in a more easy way. So at the moment, we are in fundraising. We are close to closing our Series A, and then we will further scale our product that is currently focusing on Germany and put a longer vision across Europe and see what next markets we will be addressing. So thanks for your attention, and have a good day.